Hello and welcome to our 4th episode of Your Money Life Coach on eRadio with me, Barbara Mandel. This is your weekly Wednesday inspiration to act and manage your money better. Welcome to 2021. Today we are going to discuss the different savings accounts you can use to reach your 2021 goals. If you haven't set your goals for 2021 as yet, episode 3 contains some really great tips on how to do so. Savings products are generally used for short-term goals, let's say 1 to 3 years, and generally have very little risk associated with them. Before we get into the savings options you have, I want to say that having money in your check account is not the best idea if you plan to save for a specific goal. There's a number of reasons for this. Keeping your money in your check or usual account is not only dangerous, but generally does not earn you interest. Other than this, keeping money in your usual account could also lead to obstacles to achieving your goals, as you might use that money for things without realizing until it's too late. So let's dive right in and start with transmission accounts. A transmission account is not your usual account, although some people use it for their usual day-to-day account. It can be very useful for an emergency fund or setting aside money for a specific purpose like car maintenance. Transmission accounts generally have a debit card linked to them to make transactions. Transmission accounts generally have the interest rate linked to the Reserve Bank's repo rate. So this means every time the Reserve Bank changes the repo rate, your rate will change on your transmission account. Looking at linked savings accounts. Linked savings accounts are also great to use for an emergency fund or setting aside funds for a specific purpose. This is also great for saving in the short term, say a 6 months goal. The access to the funds from linked savings account would typically be to transfer it back into your usual account. Linked savings account generally requires very little capital to maintain. In some instances, linked savings accounts might have a small monthly fee. Interest rates on linked savings accounts are generally also linked to when the repo rate changes. Considering money market or call accounts. Money market or call account generally offers a higher rate of interest than your normal savings account. It is generally tiered to the amount of capital that you are saving. The funds from these accounts are generally available immediately and often does not have a monthly account fee, and very little to no fees if you transfer funds back to your own account before you make third-party payments. Banks often offer a slightly higher interest rate because these accounts are usually left in the bank for a period of time, even though the funds are available immediately. With money market or call accounts, the interest rate will also change as the repo rate changes. Next, we look at accounts with notice. Notice accounts offer a higher interest rate than money market or call account, but requires a bit more planning on your end. You will need to provide the bank with notice. Some have 7 days, but the most popular option is 32 days. Should you need access to these funds sooner, there is usually a steep penalty fee. When you open these accounts at your bank, you have the option to either have the interest paid out to you in a different account or paid into the same account, which means that the interest you will earn the following month is compound interest, otherwise known as interest on interest. The interest rate on accounts with notice is also linked to the repo rate and might change when the repo rate changes. Now let us look at fixed deposits. With fixed deposits, the interest rate is often depending on the term that you are fixing the deposit for. The longer you fix the term, the better the interest rate that the bank will offer. The difference or the spread will largely depend on where we are with the interest rate cycle, since the rates of fixed deposits are also fixed for the duration of the investment. In some instances, you will find the interest rate, for example, a 6 and 12 months fixed deposit might be the same due to the bank's prediction of how the repo rate will change. This does not necessarily mean that you should fix your investment for a 6-month period only. You should consider what you are trying to achieve and seek advice of a professional financial planner to guide you. With fixed deposits, you also have the option to choose what happens to your interest every month. You can reinvest the interest every month, have it paid out to you, or you can only choose to receive the interest at the end of the period. Where the interest is paid to you at the end of the period, the bank might offer you a higher rate. Interest rates are often quoted at nominal rates, And to compare the options between receiving the interest monthly or at the end of the period, you should ask a bank for the comparison of the effective rate. With fixed deposits, you can in certain instances, depending on the bank's rules, withdraw your money sooner. However, this generally goes hand in hand with a very steep penalty. The options we've discussed today are available at most registered banks. Your regular bank might not be the best one for you and what you need, and you should consider doing some homework online or visit a few banks to compare the options and understand the implications, especially where you have to commit to a specific term for your savings. That's it for me today. Be sure to tune in next week Wednesday at 3:20 here on eRadio, where I'll be discussing guidelines for investments in 2021. Feel free to follow me on Facebook, Your Money Life Coach, for more tips on how to manage your money better, or you can visit our website at www.yourmoneylifecoach.co.za. Thank you for listening.